Hello everyone. Yeah, what a beautiful day. Maybe that's the reason that we're not so big in numbers. But welcome to Blockchain Center for the 15th Talk and Trade. And I'm really happy to present you two speakers today. The first one is Benas, from one of our new residents from Exorio Capital. And that's a new thing that we're gonna try today and then move on with next Wednesdays. And we'll have a quick 5 to 10 minutes with Benas or his team to talk what is happening now. So some introduction from Benas, what to expect for next Wednesdays. So please.
Yeah, so right now, I don't know if I need a speaker, but right now we're gonna cover some, just today and for the following Wednesdays, we're gonna cover some markets versus fundamentals, news over the week, and answer your practical questions about trading. So during the next Talk and Trades, we're gonna have my colleagues with me who are basically active traders, what we do, and they will be able to answer your kind of practical questions about trading. But right now, I'm gonna talk about markets and fundamentals in general. So first of all, what are we? So we're Exorio Capital, and we're basically an actively managed crypto fund. So what we do is we try to be different from the typical crypto fund, which is just buy a basket of coins and hold it for a long term. So for example, what they do is they take top 20 coins, they say, okay, Monero, Ethereum Classic, Zcash is really good, they're going to be big in 5 years, they buy them in a basket, they sell you the index, right? What we do is we say, okay, we don't do that because then you kind of, you get all the fluctuations of the market. You can go down 70%, you can go up like right now probably not more than 200%. But those ups and downs really usually don't let you sleep, right? So what we do, we look at the crypto market as a place of inefficiencies, and we're looking to actually actively trade on those market inefficiencies. For example, overreaction, trending coins, some arbitrage opportunities because of supply and demand, prices, hard forks, and so on. So we kind of, every day we stay in the market, we look at it, and we kind of try to identify all those market inefficiencies and exploit them. So yeah, and the most important part of this is probably the last point, that our strategies, of course they use Bitcoin to get into the position and out of it, but we use options to hedge the Bitcoins that we have. So, okay, we pay the price of an option, right, at the beginning of the term, but then we compensate for the price, and we don't have the downside, which is like basically the idea of a put option. If you're familiar with it, it's basically the insurance of the downside of the volatility. You can check us at our website, or you can just talk with us here or call us, doesn't matter. So if you're interested in to talk with us, you can approach me on Wednesdays or here in the Blockchain Center every day. But let's move to the things that I wanted to talk about. So first of all, there's this quote which was kind of prominent during the past year, that Bitcoin is over and any other coin is now the next big thing because it's more decentralized, more scalable, faster, you name it, whatever. So yeah, that's really what happened, right, in the market, as you can see. When you look at the dominance of the crypto assets, how many of you are familiar with the term dominance of a crypto asset? Are there people that doesn't know what I mean? Okay, so we probably know what that means. So the dominance of crypto assets show that this quote was really true. So Bitcoin dropped, like it lost 10% of the dominance, while the top 10 alternative coins or crypto assets also lost positions, while the other crypto asset dominance increased almost double, like more than double. So from 10% to 24%. And while that is kind of apparent, we will look forward to it, like we will look further what really happened, and is there really kind of based on fundamentals, not only the hype. So when you look at the crypto market as a whole, one kind of style to look at it is to look at the total market cap, of course, the number of crypto assets, and then to get the average value of the crypto asset. And for example, we can see that during the past year, the total market cap, even after the dip that we had at the beginning of the year, which was 70%, we still have that the total crypto asset market is 5 times the market capitalization comparing to what it was a year ago. While the number of crypto assets increased, but it only tripled. So as a result, what we have that the average value of a crypto asset doubled, right? But that doubling of the value is basically all based on the hype, as we will see further on. So the 3 pillars of crypto fundamentals. These crypto fundamentals are not, not created by us. We basically took them from Thomas Lee, which is a fund manager in the United States, and Robert Metcalfe, who have the Metcalfe's law, which is used to evaluate networks, social networks, telecommunication networks, and so on. And the fundamentals that these 2 individuals use to evaluate networks is basically these 3, the number of active addresses, or the number of daily active users using the network, then the transaction value, or the daily transacted value on chain, but it's a value, not a volume, basically how much money is used on a network, and then the number of transactions, or the the number of daily transactions also on chain. So you not only look at the volume of those transactions, like on-chain transactions, but also at the value that is on them, like that is in them. So looking at those 3, you can clearly see that nobody's actually using the crypto networks. Unique addresses, for example, on the left axis and the topmost curve, decreased if you compare like a year ago and right now. It went up for a bit during the whole boom during the December and January, but right now, if you take point by point, it's declined. The same is true for number of transactions, the second from top line and the left axis as well. The only thing that really increased a bit is the transaction value transacted on chain in US dollars. So that increased a bit, around 40% if you compare it to the value a year ago. Yeah?
How would the unique addresses go anywhere except for up? Like how does the address...
these are unique addresses, active addresses.
Okay.
Yeah. So as I said, like one of the fundamentals is like daily active addresses. Yeah, but it's a bit misspelled here. So in general, what we see is all the hype, right? All the hype, every other coin is better, and so on. But when you look at the fundamentals, which are basically what happens on those crypto networks, you see that they're all ghost towns. Nothing is happening there. Like it's all been hyped, and now the correction is happening, and right now after the correction we see that it stalls. And that's what we see in fundamentals. Like it dropped to the levels a year ago and it stalls. However, the value is still twice up. So yeah, that gap is filled with basically all the speculation and marketing and so on. So we'll see where that goes. But at the moment, yeah, that's the insight. So thank you, and yeah. If you have any questions, I don't know if Giga is gonna.
Well, I would like to thank you, and you heard Benas, and we'll have him for. We hope to have for every Wednesday to do these kind of short reviews and get a little bit deeper every time. And well, that's a learning thing. So thank you, Benas, a lot. Yeah. And yeah.